Shares of Amgen falling in the after-hours session on the back of its earnings report. Let's get to Frank Holland back at headquarters with Wall Street's reaction to the results. Hey, Frank.
Hey, good afternoon, Melissa. We spoke to 5 analysts. None of them really surprised to see Amgen shares falling after weak guidance despite solid beats on revenue and EPS. Michael Yee of Jefferies telling us the weak, or what he called conservative guidance for the biopharmaceutical, has been part of a pattern for the past 6 quarters where they eventually ended up beating. Yee saying, we think the stock is down and expected reaction, but the guidance ultimately is conservative. He's saying conservative, not weak. Ken McCrae of RBC saying the beat was largely due to legacy products, which won't see shareholder reward due to impending risks by generics and biosimilars. McKay also told me that the company is really under intense pressure on its best-selling drugs, including Enbrel and Sensifar. Alethea Young of Cantor Fitzgerald echoing that sentiment, saying she's expecting to get more insight on what a lot of people are calling weak guidance from the call that started at 5 o'clock and is still going on right now. She's saying on the call, we are focused on color about the pipeline, especially in oncology, biosimilar competition in the base business, Amavig, its migraine medicine, launch trends, and deploying capital. Now, its best-selling drug, Enbrel, did see a decline in sales, but revenue still beat estimates. So again, a strong beat on revenue and EPS, and analysts are listening to the call right now, waiting for more insight on why this company decided to issue what a lot of people are considering weak guidance. Yeah. Melissa, back over to you.
Frank, thank you. For more instant analysis of the earnings and what it means for biotech, let's bring back Chris Verrone, a strategist who's over at the Plasma Still. Chris, what are you looking at?
Well, we actually like the group here, and I recognize we have Amgen down modestly after hours here, but when we put this 2% decline in some context and look at the longer-term chart here, what we really see with Amgen over the last 3 years is a series of higher lows, about 140, 150. We now think that 180 level is key. On any pullback here, we got to hold 180, and I think ultimately you can move towards a breakout above the 200 level. Importantly, the stock has actually improved some relative to the S&P. Now, our favorite biotech name in the whole space is actually Regeneron. This is one that's already acting better. It's on the verge, really, of breaking out right there. It's already done it in relative terms. So when you start to pick apart the pieces within biotech, we find names like this one that are already exhibiting relative leadership. We want to be long here. Now, on the other side, there's some misses too. And I think the move here in AbbVie recognizes to us how bifurcated this space is. You're already making new relative lows versus the S&P here. And I think importantly, you repelled right at the downward sloping 200-day average. So new relative lows, failing at the 200. I think AbbVie is an example of one you want to avoid. We buy the weakness in Amgen, and I think Regeneron is the best name in the sector.
All right, thanks for that, Chris. I'm glad Chris actually mentioned AbbVie because it was AbbVie's warning on Humira that really caused some concern about the Enbrel business here for Amgen, which has come under pressure, as we've seen in the results. And then when it comes to biosimilars, Neulasta. So we're talking about 2 major drugs in its portfolio that are facing some sort of pressure and or competition.
Yeah, rheumatoid arthritis. So Enbrel beat on revenues, as Frank said, and Neulasta beat on revenues, as Frank said. But the guidance wasn't conservative. The guidance was miserable, and I'll explain why. Next year, the street was looking for $14.57. They guided $13.10 to $14.30. First of all, you can drive a truck through that, number one, and that's pretty lousy guidance. I'm surprised the stock's not down more than it is. Now, again, this was a good quarter, but to say that's conservative, I think, is giving them the benefit of the doubt.
And both those drugs in 2023 are going to be cut in half as far as their projections, as far as what their revenues are going to be. So you got to have a tremendous pipeline. Why not make it easier on yourself? And the IBB has had its best month in 2 years. By the IBB, it's up 11%. Instead of taking all these risks on these one-off FDA approvals.
I mean, Enbrel is going to face biosimilar competition in a couple years, so it's, yeah.
That's true, but, you know, Neulasta is almost as big of a drug for them as Enbrel, and they crushed it on that one. I mean, for what it's worth, this guy pointed out this is a very, very strong quarter. It tells you how bad the guidance was, and that's still what people are coming to terms with. This is a stock that also, I would argue, has been very defensive. As Steve pointed out, the entire sector largely has been. 191 is the 200-day. That's where I think you watch it. I think if it holds, though, this is a stock people still want to stay in.
I'm with Stephen P. Grasso. I like buying the IBB. I mean, the whole idea is they're going to have to buy some kind of drug so they no longer have the competition and have to carve out a little bit of a niche. The only thing I don't like about the IBB is how much it's run up this year. And it's right against roughly 111, 112. That seems to be resistance. So the way I would trade it is let it prove it to me. Let it really break out before you get into that. But if you want to play the biotech theme, that's the way to go for me.
It is up at 20% from December 24th lows.
Yeah,
so,
I mean, and last year, the trade, it was down 10% last year, then up 20%. So, yeah, this could be a settling in stage. But with the IBB, you're going to get your Biogen, your Celgene, and your Amgen in those top couple of holdings. Why not just make it easier? If you want to be in this space, that's where you should be.
All right, let's quickly check in with Gene Munster, who's listening to Apple CEO Tim Cook on the conference call. That stock is now at after-hour session highs. So, Gene, what stands out to you?
Melissa, the call's taken a different direction than what I expected. They're still in prepared remarks, but typically when companies have unprecedented miss like that, they send a lot of caution to investors in the upcoming quarters. Instead, Apple's giving some confidence that they can work through this, increase install base by 7%, new programs to entice people to upgrade. I think it's just simply giving investors encouragement that this storm too will pass.